We forecast prices and fundamentals. Whether you're a trader, producer, or consumer, you can hedge your bets with Montel's diverse forecasting portfolio. Contact us at sales@montelnews.com for more info and a free trial.
Hello listeners, and welcome to the Montel Weekly Podcast, bringing you energy matters in an informal setting. This week, we turn our attention back to the Nordic region, in particular to developments in the wholesale power market and the impact on industry. In our previous episode, we talked about very high gas prices, but this time around we'll focus on the reasons for very strong power prices in the Nordic region, the outlook ahead for the winter, and the impact on heavy industry. Joining me, Richard Sverrisson, to discuss are two experts who will share their extensive knowledge of the Nordic power market. Hello, Sigbjorn Seland of StormGeo. Good to have you on the pod again. I hope you're well.
Thank you, Richard. I'm well. Thanks for the invitation. Happy to be back.
Excellent. And a warm welcome to you, Ole Lofsnaes of global aluminium firm Alcoa. It's your first time on the pod, and I'm looking forward to hearing your views on the state of the market.
Very good, and thanks for having me. Whether or not this is going to be the last time, well, we'll see.
We'll see. I'm sure it won't be, Ole. Sigbjorn, last time we spoke, prices were very high, and they continue to be very high. What's going on?
Yeah.
Are we at a different place than we were in May when we last spoke, or are the fundamentals pretty much the same?
Yeah, we are in a different place. We have record high or close to record high spot prices all over Europe. We have this very high short-term marginal cost for coal and gas, nat gas-fueled power plants, which again is due to the very high prices for coal, natural gas, and the CO2 quotas, the EUAs. And for the Nordic market, of course, the hydrological balance is crucial. And we are approaching, say, in a couple of weeks, a deficit of about 20 terawatt hours, which means that the hydropower production in the next, let's say, 18 months will be about 20 terawatt hours lower than what you normally would expect. So it's the two factors together pushing Nordic spot prices to record high levels.
And what's the weather outlook, Sigbjorn? What's the likelihood of rain or the very important hydrological reservoirs to fill in the coming weeks, months?
No, it doesn't look too too good. We are heading for a fairly dry 2 weeks, and then we are well into September. Regarding the filling of the water reservoirs, it's beginning to look a bit strained for sure. It's not too much time left to start filling up the reservoirs now, and as I said, it doesn't look too promising in that sense for the coming weeks and for September as a whole, I would say.
So we can expect very high prices to continue?
Yes.
For how long is my basic question there, Sigbjorn?
Our simulations show that the result from the simulation is that the very high power prices will continue for the next, for the coming autumn and winter in particular, but for the next 18 months. And actually, I don't recall, I think, to see that our price simulations are that high compared to current market futures price levels that we see right now. So we are, what should I say, very bullish to power prices going forward. And just a bit of the background here, it to a large extent sort of hanging also on the high coal and gas prices, and things might change rapidly. But it seems that the main driver here to high coal and gas prices is this huge growth in electricity consumption in China. Well, it's a very strong driver there, and I don't think it's reasonable to expect coal and gas prices coming down very much, at least in the short to medium term. And EUA prices are high, close to record high, driven by, for sure, the heightened ambitions for emissions reductions, the 2030 target, and also by the coal and gas prices, for sure. Have the the natural gas to coal switch in the European power sector, which is obviously driving CO2 emissions and EUA prices.
I want to return to some of those areas or some of these issues, Sigbjorn, but I think before we go there, I mean, the market seems to be pricing or expecting prices to fall from Q2 next year, but you're talking about 18 months of higher prices.
Absolutely, for sure. You should expect lower prices from Q2 22 onwards, but still to remain relatively high. And as I said, our simulations indicate that prices will remain significantly higher than what you could see from the futures market right now. But the highest prices will be this fall and coming Q1 22. That's for sure, or that's probably so.
And then, of course, we heard the news of Olkiluoto 3 being delayed again. So that adds another very bullish factor into the mixture here, doesn't it?
Absolutely, it's a lot of bullish factors around the Olkiluoto 3 for sure being one of them. It's what shall I say? It's a catastrophe, the whole project, and the reason for the delays are maybe a bit different every time, but I think it sort of smells like further delays the way they developing this.
So Ole, what's your view here? What is the impact of these very, what's your reaction when you hear that these very high prices are likely to last for another 18 months at least?
You should have seen my face as Sigbjorn was talking. It was getting more exasperated by the second. Bad news after bad news after bad news after bad news. I'm sure the power producers are thrilled about this. We're not particularly thrilled, as I'm sure you can imagine. I work for a company that has 2 aluminium smelters in Norway, and their combined annual consumption is give or take 5 terawatt hours. And that's roughly 3% of the entire Norwegian consumption in a year. And making aluminium is a very, very, very electricity intensive process. If you take all the costs that default to an aluminium smelter, it's a bunch of different things. The major cost component is the cost of raw materials. That's the alumina oxide that we buy. But those prices are set in a global market. So when the prices of alumina oxide goes up, that applies to everyone. The Norwegians, the Chinese, the Malaysians, the Russians, all of us. But on the cost side, the one distinguishing factor is the power price. That's what separates us. That's what drives our competitiveness. And in Norway, we are usually blessed with, let's call it, relatively low power prices than not all of our competitors, but a lot of our competitors. And the power is renewable. So that is a combination that works for us pretty well. And when we get into situations where power prices increase, it brings a bit of worry to us because that basically pushes us out of market, but not necessarily for long periods of time. So, we're used to being in a weather-dependent power system. We're used to prices going up and down. We're used to dry periods and the impact that has. And of course, we do mitigating efforts. We secured a lot of power on long-term contracts, but not all of it. For many reasons, a lot of power is bought on either short-term contracts or sometimes even in spot. And when these things happen, it obviously has an impact on us. So we feel the pain. We certainly do. And obviously we hope that it's short-lived. So the current situation where you've got ridiculously high power prices and an outlook that, it's probably going to remain that way for a year, maybe even more, is definitely not very encouraging. But that's not all the factors we take into account. We also have a bit more sort of a fundamental long-term view. And another thing that sort of makes us a little bit uneasy is that, as far as we can tell, power consumption is set to increase, and it's going to increase by quite a bit. And there really isn't happening much on the supply side. I mean, we mentioned Olkiluoto just now. Sooner or later, it's probably going to come to operation. Just don't know when. But particularly from a Norwegian standpoint, there's been a bit of a halt in new power supply. And the critical thing for us is really to sort of unclog that and make sure that we start building power again. Because if we move into a situation where we're sort of fundamentally more unbalanced than we're in a surplus, that does not bode well for us.
But PPAs are quite interesting for Alcoa, are they not, Ole? I mean, the company signed a few to a few wind PPAs?
Yeah, that's right.
So that's an option. Obviously, that's where you're maybe contributing to increasing the supply side.
Yeah, but we do. We've got 3 wind power PPAs, and we're very glad that we have them, obviously. And if we do make the decision that we'll be adding to it with, say, another wind power PPA or a hydropower PPA or a mix, then, that would be good. But this is not a very good time to approach companies, because obviously the hydropower producers, they're going to use the market as benchmark. Wind power producers maybe a bit less so, but then it will become an issue whether or not the project is project finance. So if we were to step in and secure more wind, we would probably prefer doing it with a project that's being developed. And at the moment, there isn't really much of that happening. There's a bit in Sweden, but ideally it would be located in Norway.
Industry in Norway is certainly given some kind of carbon compensation, isn't it, Ole? Does that help the picture here? Does that ease some of the burden for industry?
Yes, it does, which is its intention.
And is this something, were you pleased that there were no changes in that sort of Fit for 5 package that came out of the European Commission in July?
Well, we don't know that yet. Well, it's currently sitting with ESA. Is going to review the Norwegian government's proposal. I believe that's scheduled for September. I may be mistaken. And then there will be a notification a bit later on. And then there will be an internal political negotiation here in Norway. And then it will, hopefully, before the new year, be turned into law and approved by the EU Commission, and then we will know. But only then will we know exactly what the carbon compensation is going to look like up to 2025, when the whole thing is going to be reviewed.
Okay. Sigbjorn, if I can turn to you again. You've also seen, later this year, the cable linking the UK to Norway will be in place and will be operational. What do you expect to happen then in terms of prices?
Yeah, well, I think the consequences of the UK cable now looks to be much, much bigger in a way than what we expected maybe only like 9 months or in the beginning of the year, and it shows how complicated in a way things are. But as it looks now with the startup of the UK cable approaching, and given the very low water reservoir filling in southern Norway and a very limited opportunity for power imports from Sweden, it seems, I would say, quite obvious that prices in southern Norway will rise towards or to the price level in Germany for, say, from this autumn and throughout the autumn and the winter. And I don't think this is reflected in the market at all, really.
So then we're talking around 100 euros, where at the moment we're around 60. So there's a jump of around 40 to come. I'm sure that's not going to be music to all his ears.
Maybe not, but significantly higher for sure. But just a short comment. We know very well how fast things are turning in the Nordic market. So and nobody know what the future will bring. And the deficit of 20 terawatt hours in the hydrological balance can turn into a ditto surplus in 3 to 4 months, and then suddenly things look quite different. So the uncertainty is, I would say, as always, big, but everything considered, it looks very bullish going forward, and for southern Norway in particular, definitely.
Both of you mentioned strong outlook for demand growth in the region. We've seen very bullish forecasts from industry associations, the electricity industry associations and TSOs. Is there an issue that if prices continue to stay this high, you drive large industries such as the aluminium or the smelters out of the region? Is that a danger?
Well, if they remain very high for a long time, for sure, but the industry is used to live with volatility, so I wouldn't be too sort of concerned in the short term, and they for sure have hedged parts of their needs. But that said, for power intensive industry in southern Norway, things definitely doesn't look as good now as it did in the beginning of this year. And Ole mentioned, that the window for developing new wind power in Norway is closed, as we know, and you will not see new developments for probably 7 to 10 years. And another factor which is very central topic is how you see that this Swedish TSO limits the transmission capacities between the Swedish price areas and towards the neighboring countries. And the Swedish TSO has been doing this for some months now, but during the spring it sort of surprised, I would say, all of us how extensive these limitations turned out to be, and this has really big consequences for the Nordic power market in both in the short and the long term, because as the Swedish TSO, they sort of indicate that they have no short-term solution to this, and have indicated that limitations to transmission capacities can go on for years, for many years. And this is again is a significant limitation for the development of new wind power in the Nordic region, with the UK cable in operation and limitations to distribute the wind power in the Nordic region. It doesn't make sense really, or it doesn't make the same sense to develop more wind power in the northern parts of in northern Norway, in northern Sweden and southern Norway, where we obviously now, or from a financial point of view, should develop more wind power. It's impossible.
It's a very bullish mix here. A few spanners in the works, such as the grid limitations from Sweden. But Ole, I mean, when you listen to this and you think, for Alcoa, you're a global firm. I mean, is there a real risk that companies such as yourself will say, well, we've had enough. We can't take this, even though we're here for the long term picture. But we may just move our production elsewhere.
As Sigbjorn said, and I said earlier on, we're used to volatility, and we're in a high price situation right now. But these things change; they always do. They go up and down, and it depends on the weather, and that's going to be the situation also in the future. It's the weather impact is going to be mitigated by, amongst other things, the interconnectors going to Germany and the UK. Speaking of the UK cable, it couldn't have come at a worse time. But we have owners who are in the States who know basically, well, at least the basics of how the Norwegian and the Nordic power market works. And they also know that there are opportunities to get around this. The big concern, I guess, is let's call it the overall perception that Norway is a low-price power market. It's attractive for industry, and it's attractive for electrification elsewhere too. If this situation that we're in now doesn't go away, if prices stay high and it keeps compounding with more and more effects, the real concern is what happens if that perception changes? What if Norway is no longer considered a low-price country? And that may have a long-term impact. I'm not going to take anything for granted here. And I do think that things are going to look better eventually. But obviously, we do have some fundamental developments that suggest that perhaps, unless we can get more renewable power into the system, we're going to have to get used to a little bit of a different price levels than we've been used to in the past.
Well, we've seen in some countries, for example, the Spanish energy minister calling for intervention into markets. Do you think this is the way to go? Some people calling for price caps.
I can understand the political appeal of it, but I'm not really opinionated about that. We have a power market, and the market works well, and there's a full good explanation for why the prices are what they are at the moment. And even though policy can certainly influence that, there are other ways that you can influence the power market than a direct price cap, for instance. I mean, one thing is that you take a very, very close and scrutinizing look at the impact that power cables have. And the other thing, of course, is, well, maybe this isn't the right moment to put a lid on developments of power supply. Their intentions may be perfectly okay in that sense, but if the competitive advantage of Norway is really that we usually have more power production than we consume, and it needs to stay that way. And that's something that everyone knows. So I would definitely go down that route first before you start intervening directly into the market.
Well, Ole, I'm sure we'll invite you back, and we're going to keep a very close eye on developments in the region and on the fundamentals and the price outlook. So thanks very much for coming on to the Montel Weekly Podcast, and thank you, Sigbjorn, for joining again.
Thank you.
Thank you.
If you would like to follow more discussions on the future of the Nordic power market, the outlook for power prices in the region, and what's happening to PPAs, then follow the link on the Montel Group website to the Nordic Energy Day. That's about all from the Montel Weekly Podcast this week. You can now follow us on our own Twitter account, aptly named the Montel Weekly Podcast. Please direct message any suggestions, questions, or if you think of a potential guest that would be very good for us to speak to. You can also send us an email to podcast@montelnews.com. Remember also to keep up to date with all that's happening in the energy markets across Europe and beyond on Montel News. Lastly, you may have noticed that we've changed the look of our webpage and logo. This is part of the broader Montel Group refurbishment. But you can still find us at the places where you get your favorite podcasts from, whether it be Apple, Spotify, or wherever. Thank you and goodbye.